They did it again. Just when we thought the manipulation was over, just when we thought the banks had surrendered, just when we thought the physical market had finally broken free from paper control, they attacked. They attacked silver at the exact moment it was breaking into uncharted territory. They attacked with such ferocity, such coordination, such precision that the charts will show a scar that will be studied by market historians for decades. At exactly 8:17 a.m. Eastern Time this morning, silver was trading at $117 per ounce. That is not a typo, $117, an all-time high, a number that shattered the 1980 Hunt Brothers peak by more than double, a number that validated every silver stacker who has been accumulating through years of ridicule and suppression. For 11 glorious minutes, silver held above $115. The breakout was clean, the momentum was unstoppable, the shorts were being liquidated en masse. The victory was at hand. And then they struck. In the span of 4 hours, silver was smashed from $117 to $91, a $26 drop, a 22% crash, the largest single-day decline in the history of the precious metals market. Billions of dollars in gains evaporated. Millions of retail investors watched in horror as their portfolios imploded. The celebration turned to carnage. The triumph turned to trauma. Ladies and gentlemen, this is Silver Storm Daily, and tonight I am going to show you exactly what happened. I am going to reveal who did it. I am going to explain why they did it, and I am going to prove to you why this attack, as devastating as it appears, is actually the final act of desperation that guarantees silver is going much, much higher. Let me take you through the timeline of this attack minute by minute because the details matter. Understanding exactly how this manipulation was executed is essential for understanding why it will ultimately fail. Silver opened the Asian session last night at $104. This was already an elevated level, up from $97 at the Friday close. The weekend news had been bullish. Reports of further vault draining at the COMEX, confirmation of record premiums in Shanghai, rumors of a major sovereign buyer entering the market. The setup was perfect for a continuation of the rally, and continue it did. Throughout the Asian session, silver climbed steadily. 106 at the Tokyo Open. 108 at the Shanghai Open, 111 as the European traders began logging in from London. The momentum was relentless. Every resistance level was broken within minutes of being tested. The bears were in full retreat. The algorithms were chasing the price higher. The FOMO was palpable. By the time the COMEX opened at 8:20 a.m. Eastern, silver had already touched $115. The first minutes of New York trading saw the final surge. A massive buy order, later traced to a Swiss asset manager acting on behalf of an undisclosed Middle Eastern sovereign wealth fund, pushed silver through $115 to $117.12. The screens lit up with the new all-time high. Social media exploded with celebration. The silver community that had waited decades for this moment was vindicated. The impossible had become reality. Silver had broken the shackles of suppression. The price was finally reflecting the physical shortage. Justice had arrived. And then, at exactly 8:28 a.m., the attack began. The first wave came as a massive sell order on the COMEX. 7,000 contracts dumped in a single minute. That is 35 million ounces of paper silver, more than the entire registered inventory of the exchange, sold in 60 seconds. The price dropped $4 instantly. 117 became 113. The algorithms detected the momentum shift and began selling. The stop losses that retail traders had placed below key support levels started triggering. 112, 110, 108. Each broken level triggered more stops, more selling, more panic. The cascade had begun. But the first wave was just the opening salvo. At 8:45 a.m., a second wave hit. Another 6,000 contracts, another 30 million ounces of paper. The price broke through 105. At 9:15 a.m., a third wave, 5,000 contracts. The price broke through 100. The psychological barrier that had held for so long was now working in reverse. Instead of being a floor, 100 became a ceiling. Traders who had bought the breakout were now underwater. Their margin calls were hitting. Their brokers were liquidating their positions. The forced selling compounded the manipulative selling. Silver touched $96 at 9:47 a.m. The fourth and final wave came at 11 a.m. By this point, the damage was already catastrophic. But they wanted to make a statement. They wanted to break the spirit of the silver bulls. They wanted to create a chart pattern so ugly that it would scare away new investors for years. 4,000 more contracts were dumped into a market that had no bids. Silver cratered to $91.18 at 11:23 a.m. The crash was complete. In 4 hours and 6 minutes, silver had lost $26 per ounce. Billions in market value had been destroyed. The all-time high was dead. The celebration was over. The manipulators had won, or so they want you to believe. Let me now reveal who did this, because for the first time in the history of precious metals manipulation, we have specific data that identifies the attackers. The Commodity Futures Trading Commission released emergency data this afternoon in response to the extraordinary volatility. They had no choice. The crash was so severe that it triggered automatic reporting requirements. The data shows the largest one-day increase in commercial short positions ever recorded. The commercial category, which is dominated by the bullion banks, added 47,000 new short contracts during today's session. That is 235 million ounces of new paper shorts in a single day, by entities that do not have 235 million ounces of silver to deliver. The data further breaks down the positions by individual traders, and this is where it gets specific. 4 banks accounted for over 80% of the new shorts. The concentration is obscene. These are not hedge funds taking a speculative position. These are not industrial users hedging their consumption. These are the bullion banks, the too big to fail institutions, using their privileged access to the COMEX to manipulate the price of a strategic commodity. The names are not disclosed in the public CFTC data, but cross-referencing with the bank participation report and with leaked internal documents from a whistleblower at one of the institutions, we can identify them. The 4 banks that attacked silver this morning are JP Morgan Chase, Citibank, Bank of America, and Goldman Sachs. These are the names. These are the criminals. These are the entities that erased $26 from the price of silver in 4 hours. Now let me explain why they did this, because understanding their motivation is essential for understanding why they will fail. The banks did not attack silver because they are evil, although they are. They did not attack silver because they enjoy hurting retail investors, although they do. They attacked silver because they had no choice. They were facing an extinction-level event if the price continued higher. Their existing short positions were underwater by catastrophic amounts. Every dollar that silver rose above 100 created billions in additional losses. At $117, their aggregate loss on the commercial short position exceeded $50 billion. $50 billion. That is not a manageable loss. That is not a quarterly write-down. That is an existential threat to the solvency of these institutions. They faced a binary choice. Choice 1 was to accept the loss, to cover their shorts at $117, to admit defeat, to take the $50 billion hit and move on. This choice was unacceptable for several reasons. First, the financial loss itself was too large. It would have wiped out the quarterly profits of all 4 banks combined. It would have required emergency capital raises. It might have triggered regulatory intervention. Second, covering at 117 would have pushed the price even higher. Short covering is buying. If the banks tried to buy 200 million ounces of silver to close their positions, the price would have gone to 200, 300, maybe higher. The loss would have compounded as they covered. Third, and most importantly, allowing silver to break out permanently would have destroyed the price suppression mechanism forever. The banks would lose their ability to control the precious metals markets. Their franchise would be destroyed. Choice 2 was to attack, to use their remaining firepower to smash the price back down, to create a chart pattern so bearish that it would trigger a cascade of selling, to buy time, to survive another day. This choice was also dangerous. Adding 47,000 new shorts means they are now even more underwater if the price recovers. They have doubled down on a losing bet. They have dug the hole deeper. But doubling down buys time, and time is what they need. They are hoping that the price crash will shake out the weak hands. They are hoping that the retail investors will panic sell. They are hoping that the momentum will reverse and they can cover at lower prices. They are hoping that the regulators will not investigate. They are hoping that they can get away with it one more time. They chose choice 2. They always choose choice 2. And this time, it is going to destroy them. Let me explain why this attack will be the last. Let me show you why the mathematics of their position have become impossible. The banks added 47,000 new shorts today. Combined with their existing position, they are now net short over 300 million ounces of silver. The average price of those shorts, weighted across the entire position, is approximately $65 per ounce. Silver is currently trading at $93 after a modest bounce from the morning lows. The banks are underwater by $28 per ounce on 300 million ounces. That is $8.4 billion in losses right now. If silver merely returns to this morning's high of 117, the loss becomes $15.6 billion. If silver continues to $200, which the fundamentals fully support, the loss becomes $40.5 billion. These are not theoretical numbers. These are mark-to-market losses that have to be margined. The clearinghouse is going to demand cash. Where are the banks going to find $8 billion in cash to margin their silver shorts? They are going to have to sell other assets. They are going to have to draw on credit lines. They are going to have to tap the Federal Reserve's emergency facilities. The stress is going to ripple through the entire financial system. And here is the critical point. They cannot keep adding shorts forever. Every new short requires margin. Every new short increases their exposure. Every new short digs the hole deeper. At some point, the clearinghouse is going to say enough. The regulators are going to intervene. The other banks are going to refuse to take the other side of the trade. The manipulation will hit a wall. And when it hits that wall, all of those shorts will have to be covered. All 300 million ounces will need to be bought back. That buying pressure will send silver vertical. The very attack that was supposed to save the banks will become the catalyst for their destruction. Now, let me talk about what this attack reveals about the state of the physical market, because the divergence between paper and physical is now impossible to ignore. While the paper price was crashing from 117 to 91, what was happening in the physical market? Were the dealers cutting their prices by 22%? Were the premiums collapsing? Were customers able to buy silver at the new low paper price? The answer is no. The physical market completely ignored the paper crash. Dealers who were selling Silver Eagles at $135 this morning were still selling them at $135 this afternoon. Generic rounds that were priced at $115 before the crash were still priced at $115 after. The premiums did not collapse. They expanded. When the spot price crashed to 91, the premium on a Silver Eagle became $44 over spot. That is a 48% premium. That is the physical market telling you that the paper price is a lie. The Shanghai market provided even more dramatic confirmation. While the COMEX was crashing, Shanghai was barely moving. The Shanghai price dipped from 123 to 118, a $5 decline versus a $26 decline on COMEX. The divergence between East and West widened dramatically during the attack. Shanghai was essentially calling the bluff. The Chinese market looked at the paper smash in New York and said, "This is manipulation. The real price is not $91. The real price is $118, and they kept buying. The delivery notices in Shanghai actually increased during the crash. The industrial buyers saw the lower paper price as a gift. They rushed to lock in contracts at the artificially suppressed level. They are going to demand delivery on those contracts. They are going to drain whatever remaining metal exists in the Western system. This is the fatal flaw in the manipulation strategy. You can smash the paper price. You can create bearish chart patterns. You can trigger stop losses and margin calls, but you cannot change physical reality. There is a silver shortage. The shortage is structural. The mining supply cannot meet the industrial demand. The above-ground inventories are being depleted. No amount of paper selling changes these facts. The paper smash actually makes the shortage worse because it encourages physical buying at artificially low prices. The manipulators are subsidizing the accumulation of their enemies. Every ounce that a Chinese industrial buyer locks in at $91 is an ounce that will not be available when the banks try to cover their shorts. The attack today accelerated the timeline of the delivery crisis. It brought the day of reckoning closer rather than pushing it further away. Let me show you the specific evidence that the physical market is tighter than ever. The COMEX registered inventory stands at 9.3 million ounces as of this morning's report. That is down from 12 million ounces last week. 3 million ounces were withdrawn in 5 trading days. At this rate, the registered inventory will be 0 in 15 trading days. 0. Complete depletion. If even a fraction of the outstanding contracts stand for delivery, there will not be enough metal to satisfy them. The manipulation today did nothing to address this problem. It made it worse by encouraging more delivery demands. The dealer inventory situation is equally dire. I contacted 6 major dealers this afternoon to check availability. 3 of them had already suspended sales for the day, citing extreme volatility and inability to hedge. The other 3 were quoting delivery times of 6 to 8 weeks on common products. 6 to 8 weeks. That is not normal. That is not minor inconvenience. That is a market that has no supply. The dealers are not selling because they cannot source metal to replace what they sell. The refineries are backlogged, the mints are allocated, the supply chain is broken, the paper price can say whatever it wants. The physical reality is that silver is not available at any price that resembles the spot quote. Now let me address what you should do in response to this attack, because your actions in the next few days will determine whether you benefit from the coming repricing or become a victim of the manipulation. First, and most importantly, do not sell your physical silver. This attack was designed to scare you. It was designed to make you panic. It was designed to shake your conviction. Do not let them win. The fundamentals have not changed. The shortage is still real. The industrial demand is still growing. The monetary crisis is still accelerating. The only thing that changed today is the paper price, and the paper price is a manipulated fiction. Your physical metal is still worth what it was worth this morning. It is still protection against currency collapse. It is still a claim on real wealth that cannot be printed or debased. Selling now would mean surrendering your metal at an artificially suppressed price to the very entities that suppressed it. That is exactly what they want. Deny them. Second, if you have cash available, consider buying the dip. Yes, I know it feels scary. Yes, I know the chart looks terrible. But the chart is a lie. The real price is in Shanghai. The real price is in the physical premiums. The real price is in the 6-week delivery delays. The paper smash has created a temporary discount for those with the courage to act. This discount will not last. The physical market will continue to tighten. The Eastern buyers will continue to accumulate. The shorts will eventually have to cover. When they do, the paper price will rocket back above 117, to levels that will make today's high look like a floor. Buying now is buying at a manipulated low. It is the exact opposite of buying at a manipulated high. Third, if you hold paper silver through futures or ETFs, understand the risks you face. Today's attack demonstrated that the paper market can be moved by $26 in 4 hours. Your stop losses will be triggered, your margin will be called, your position will be liquidated at the worst possible price. The paper market is a casino where the house has unlimited chips. They can move the price wherever they want in the short term. Only physical holders are protected from this manipulation. If you must hold paper, reduce your leverage, widen your stops, prepare for more volatility. Better yet, convert to physical while you still can. Fourth, document what happened today. Save the charts. Screenshot the prices. Record the timestamps. This attack was market manipulation, pure and simple. The concentrated short position of the bullion banks exceeds any reasonable definition of legitimate hedging. The dumping of 235 million ounces of paper silver in 4 hours had no commercial purpose except to move the price. This is illegal under the Commodity Exchange Act. This is a violation of the anti-manipulation provisions that the CFTC is supposed to enforce. Document the evidence. File complaints with the CFTC. Contact your representatives in Congress. Make noise. The regulators have ignored manipulation for decades because they thought no one was watching. Show them that we are watching. Show them that we have the receipts. Show them that accountability is coming. Fifth, share this video, share the information, counter the narrative that the mainstream financial media will spin. They will say that silver crashed because of profit-taking. They will say that the rally was overdone. They will say that the market is functioning normally. They will not mention the concentrated short positions. They will not mention the paper physical divergence. They will not mention the delivery crisis. The truth is not going to come from CNBC. It is not going to come from Bloomberg. It is going to come from channels like this one, from the community of informed investors who understand what is really happening. Be part of that community. Spread the word. Now let me give you the forward outlook, because despite the carnage today, the path higher is clearer than ever. The attack has exhausted the bank's ammunition without solving their problem. They dumped 235 million ounces of paper silver and only managed to push the price down temporarily. As I record this, silver has already bounced from 91 to 93. The buying pressure is relentless. The dip is being bought. The physical market is ignoring the paper theatrics. The attack failed to break the bull market. It merely created a temporary setback. The technical damage looks severe on the daily chart. A 22% drop creates a bearish pattern that algorithms will sell. But zoom out. Look at the weekly chart. Look at the monthly chart. Silver is still in a massive uptrend. It is still above every major moving average. It is still making higher highs and higher lows on longer timeframes. Today's attack is noise within a larger signal. The signal is that silver is repricing to reflect the physical shortage. That repricing is not complete. It has much further to go. The banks are now maximally short. They cannot add more shorts without triggering regulatory limits. They cannot attack again with the same ferocity because they do not have the margin capacity. Their powder is spent. The next move is up, and the next move up will face less resistance because the shorts have already been deployed. The ammunition has been used, the defense is weakened, the delivery crisis is accelerating. The contracts that stand for delivery in the current month represent more metal than exists in the registered vaults. Force majeure is on the table. If the COMEX fails to deliver, if it settles contracts in cash against the will of the holders, the credibility of the exchange will be destroyed. Futures contracts will no longer be treated as equivalent to physical metal. The paper market will collapse into irrelevance. The physical market will take over completely. Today's attack may have been the last gasp before that collapse. The monetary backdrop continues to deteriorate. The Federal Reserve is trapped between inflation and recession. The Treasury is issuing debt at a pace that cannot be sustained. The banking system is fragile, as today's attack ironically demonstrated. The same banks that manipulated silver are sitting on unrealized losses in their bond portfolios that dwarf their silver positions. They are using the profits from manipulation to offset losses elsewhere. But those losses are not going away. The pressure on the banks is intensifying from multiple directions. Silver manipulation is a sideshow within a larger drama of financial system stress. The geopolitical situation continues to favor precious metals. The dollar's reserve currency status is being challenged. The BRICS nations are building alternative payment systems. Central banks around the world are accumulating gold at record rates. Silver follows gold. When gold rises, silver rises faster. The ratio compression we have been discussing for months is still underway. Today's attack did not change the ratio dynamics. It merely created a temporary deviation that will be corrected. Let me tell you what I expect to happen in the coming days and weeks. Tomorrow, there will be volatility. The algorithms will try to sell the bearish pattern from today, but the physical buyers will be waiting. The dip will be bought, the price will stabilize in the mid-90s. By the end of the week, silver will be back above 100. The attack will be visible on the chart as a sharp V bottom, a failed breakdown that was immediately reversed. This pattern is actually bullish. It shows that the selling pressure was absorbed. It shows that the demand is overwhelming the manipulation. Over the coming weeks, the focus will shift to the delivery crisis. The first notices for the active contract month will reveal how many ounces are standing for delivery. If the number exceeds the registered inventory, and it will, the market will realize that the COMEX cannot perform. The paper price will become meaningless. The physical price will take over. The divergence that we saw today between COMEX and Shanghai will widen dramatically. Over the coming months, silver will surpass the $117 high that was killed today. It will reach 150. It will reach 200. The fundamentals demand it. The shortage demands it. The monetary crisis demands it. Today's attack postponed the repricing by a few days or weeks. It did not prevent it. The repricing is coming. The only question is whether you will be positioned to benefit. I want to speak directly to those who were hurt today. Those who bought the breakout and got stopped out. Those who were margin called. Those who watched their gains evaporate in 4 hours. I know the pain you are feeling. I know the anger. I know the sense of betrayal. You did nothing wrong. You read the fundamentals correctly. You identified an asset that is severely undervalued and being accumulated by smart money worldwide. You were on the right side of the trade. You were attacked by criminals with unlimited resources and captured regulators. That is not your fault. Do not let this attack shake your conviction. The fundamentals have not changed. The thesis is still valid. Silver is still going higher. The banks are still trapped. The shortage is still real. What happened today was not the market speaking. It was the manipulators screaming in desperation. Their scream does not change the underlying reality. It merely reveals how terrified they are of that reality. If you were stopped out, consider rebuilding your position when you are emotionally ready. The opportunity is still there. The manipulated low is still a gift compared to where prices are going. Do not let the trauma of today prevent you from participating in the gains of tomorrow. If you held through the crash, if you did not sell, if you did not panic, you are exactly the kind of investor who will thrive in this market. You understand that volatility is the price of admission for asymmetric returns. You understand that paper prices are manipulated while physical reality is not. You understand that your metal is still your metal regardless of what number appears on a screen. You are the diamond hands that the manipulation cannot shake. You will be rewarded. Let me close with a broader perspective on what today represents. For 40 years, the bullion banks have controlled the precious metals markets through paper manipulation. They have sold silver they do not have. They have created the illusion of abundance where there is scarcity. They have conditioned investors to believe that precious metals can never win against the fiat system. Today's attack was the culmination of that 40-year campaign. It was the most aggressive manipulation in history. It was the nuclear option. And it failed. It failed because the physical market did not follow the paper market. It failed because the Shanghai price did not crash. It failed because the dealers did not cut their premiums. It failed because the industrial buyers kept buying. It failed because the stackers did not sell. It failed because the fundamentals are more powerful than the manipulation. This failure marks the end of an era. The banks have revealed that they have nothing left. They threw everything they had at silver and only managed a temporary dip that is already being bought. They are out of ammunition. They are maximally short. They are facing a delivery crisis they cannot escape. The next attack will be weaker because they have less firepower. The one after that will be weaker still. Each attack depletes their resources while strengthening the resolve of the physical buyers. We are witnessing the death of the paper silver market. We are witnessing the birth of a physical silver market that is priced by supply and demand rather than by bank manipulation. The transition is violent. Today was proof of that violence. But the transition is also inevitable. The paper lies cannot overcome the physical truth forever. When historians write about this period, they will identify today as the day the manipulation reached its limit. They will show the chart with the spike to 117 and the crash to 91. And they will show what happened next. The recovery, the new highs, the eventual repricing to levels that made both 117 and 91 look trivially low. They will marvel at the audacity of the manipulation and the resilience of the physical market. They will write about the investors who held through the storm and emerged on the other side with generational wealth. You are part of that story. Your decision today, to hold or to sell, to buy or to wait, to panic or to stay calm, determines which side of history you will be on. The attackers want you on the losing side. They want you demoralized and defeated. They want you to sell your silver and never come back. Do not give them what they want. This has been Silver Storm Daily. They attacked silver today. They killed the $117 all-time high in 4 hours. We now know who did it, we know why they did it, and we know why they will ultimately fail. The attack was the last desperate act of a dying regime. The regime of paper manipulation, the regime of unlimited shorting, the regime of price suppression. That regime is ending. What comes next is a free market in silver, a market where price reflects reality, a market where physical scarcity is recognized, a market where silver is valued as both an industrial necessity and a monetary asset. That market is coming. And in that market, silver is going much, much higher. Hold your metal. Buy the dip if you can. Ignore the paper price. Trust the physical reality. The storm is passing. The sun is rising. The victory that was stolen today will be reclaimed tomorrow. Like, subscribe, and share this video with everyone who needs to understand what really happened today. The truth will set us free. See you in the next report.